Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and according to Redfin, it's now a great time to purchase a home yet again. Awfully familiar echoes when we compare what people were saying back in 2007, right before the greatest financial crash. Nevertheless, you guys, we're going to dig into a Redfin article today just to see what their data is saying as far as the weekly housing market update. And what I'll do is basically summarize the article. We'll take a look at the leading indicators. We'll take a look at year-over-year price decline. We'll take a look at some graphs. And then towards the end of the video, I'm going to do something that I absolutely love to do, which is compare peak to current. And when I compare peak to current, it's a really special way for me to show you guys that price is much more important than interest rate, as is not buying in the bubble. So that's towards the end, guys. I really love that part of the video. But either way, we're going to dig into that. Remember, you guys, I'm not your financial advisor, even if I want to be, even though my bio is as a realtor, loan officer, and instructor in all things in real estate in Texas. So I know a little bit about real estate, guys. Please do me a favor, understand that, and like this video if you can. Either way, guys, let's jump into this article right now and take a look at the data. The name of the Redfin article is Housing Market Update. Pending home sales improve in January as more buyers return. Now, I want to stay objective, so I'm going to read this entire article and let me know if you guys think that Redfin is being overly optimistic or if you think they're being cautious. But again, you guys, let's stay objective and see what Redfin has to say. Pending home sales fell 26%. Again, you guys, pending home sales fell 26% year over year during the 4 weeks ending January 22nd, the smallest drop in more than 3 months. Pending sales began rising on a month-over-month basis in December as buyers started returning to the market, encouraged by their increased negotiating power and mortgage rates that have declined to 6.1% from their 7% peaks. That signals the recent increase in early stage home buying demand. Mortgage purchase applications are up 28% since November, and Redfin home tour requests are on the rise, is starting to translate into sales. Well, that's pretty good because sales have been super low. More demand from buyers and less supply from homeowners. New listings of homes for sale are down 18% from a year ago. So that's a smaller drop in recent weeks. It's holding prices steady. The median U.S. sales price rose 1.1% year over year to $350,000. But again, this is so crazy because a little bit later on in the article, it's showing a lower number of $349,500. So it's just so weird that they have that they're wrong in their own article. The biggest increase in over a month. On a local level, the number of metros where prices are falling from a year earlier is shrinking. Home prices declined in 17 of the 50 most populous U.S. metro areas, with the biggest drops in Bay Area down from 20% at the beginning of January. Redfin agents are reporting that mortgage rates dipping nearly a full percent over the last 2 months is bringing back some sideline buyers and attracting new ones. They're noticing an increase in interest from clients, including requests for tours, and reporting that some homes that have been on the market for months are finally going under contract. Home buyers are starting to feel more confident as mortgage rates tick closer to 6% than 7%, and the overall economy chugs along with surprising resilience, especially in the labor market. Steady cooling inflation is likely to prevent mortgage rates from jumping back up when rates were seesawing up and down in the fall. Many buyers dropped out because they could wake up the day after finding their dream home to a 3-digit increase in their potential monthly payment. Now they have a better sense of how far their budget will go, in which neighborhoods, and which homes they can afford. So again, you guys, just like in 2007, you see the optimism coming back. And we also see, less people, just like in 2007, less people are actually searching for housing market videos or housing market crash videos. And real quick, guys, understand the type of videos I'm making. I get a lot of shame and a lot of hate. People like, oh, you're making housing market crash videos for the money, blah, 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 blah. But the reality is I'm making housing crash videos because I believe that the housing market is crashing. So all of the people that are like derogatory and make up all of these, words and these names, They're probably doing that, y'all, because they're getting desperate and scared about what's going to happen. And the only thing left that they have is to try to discredit someone like me that's onto the truth and that's warning you. And the big thing is, guys, is I'm disrupting the industry and I'm disrupting their money flow, and they hate me for it. It doesn't make a lot of sense to me, you guys. I wish that my peers would just understand what's happening and adjust accordingly. But instead of adjusting accordingly, or their definition of adjusting accordingly is labeling us crash bros. And again, you guys, I didn't want to make t-shirts, but I'm finally going to make a couple t-shirts. One is a Crash Bros. The other one is a special surprise. I think you're going to find it spicy. Regardless, let's jump into the leading indicators now. So this is this week's leading indicators. For the week ending January 26, 30-year mortgage rates dropped to 6.13%. The daily average was 6.18% on January 25th. Mortgage purchase applications during the week ending January 20th increased 3% from a week earlier and 28% from early November, seasonally adjusted. Purchase applications were down, though, 39% from a year earlier. The seasonally adjusted Redfin Home Buying Demand Index, a measure of requests for home tours and other home buying services of Redfin agents, was up 6% from a month earlier during the 4 weeks ending January 22nd, but it was down 29% year over year. Google searches for homes for sale was up 40% from the November low during the week ending January 21st, but still down 21% from a year earlier. So some pretty strong leading indicators that spells that things ain't going so good with the housing market and that this is not just seasonal. I can't believe people still think this is seasonal. And again, if anyone ever says seasonal to you guys, these are just seasonal trends, ask them this question: is quantitative tightening seasonal? Is home prices going up 40% in 2 years? Is that seasonal? Is Austin crashing and San Jose crashing over 20% from peak? Is that seasonal? Y'all see what I'm saying? You guys got to be super careful with the narratives out there because, again, like last time in 2007, a lot of people just woke up to the housing market crash and to their home being foreclosed on. That happened last time. So many people had it right in front of their faces on what was going on in the housing market in 2007. Yet millions, you guys, including your boy, including me, kept their heads in the sand, and it sucks. And that doesn't have to happen this time. And again, even if I'm wrong, we're still in a way better situation now than we were from peak. And remember, a lot of people accuse me of talking about this for 2-3 years. I started doing videos full time like this, basically the beginning of April, but I started March and I didn't even know what I was doing. So I've been just barely started talking about this, you guys. And another thing, I do plan on finding the home of my dreams. Just to be clear about that, I do plan on doing that, you guys, because I definitely believe that renting for the most part is a waste of money, right? That's just my beliefs. Let's jump back in and visualize some of this data. But before we visualize some of this data, let's look at the median sales price. And here's the discrepancy. Okay, so they're $50 off. The median sales price was $349,950, which is down week over week. Just FYI, they didn't put that here, but it is down week over week. However, it is up 1.1% year over year. The biggest gain in over a month? What? That's not really a gain. It's just comparing year over year median, right? Not average. I hate median, you guys. Among the 50 of the most populous U.S. metro areas, sales fell year over year in 17 of the biggest, including San Francisco, Oakland, Austin, Detroit, San Jose. Prices increased and this is year over year, 13.5% West Palm, 9% Nashville, 9% Milwaukee, 7% Indianapolis, and Montgomery County, 7.7%. But again, you guys, that's not monthly. A lot of people are going to hold on to that year over year data to continue to push their narrative and to continue to YOLO things, saying just buy or find a great deal and without giving people the expectation of what the possibilities are. Right? Just prepare for the possibilities. But some people, y'all, they're still YOLOing. Their head is still in the sand. They're like, oh, this is seasonal. You guys are just crash bros trying to make money, clicks, blah, 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 blah. But yet, look at all the data, right? There's a reason I'm putting the links to the data on the channel. You guys follow it, but do your own thinking. Now, I've been hearing the narrative that there's so much money on the sidelines. I'm even a victim of falling for that narrative, but I want to show you guys something real quick as far as money on the sidelines. So here's the Fred economic data personal savings rate for households. Okay. So, there's a whole bunch of money on the sidelines, right? Where is it? It's not in the banks, right? 75% of the investor shares was to like mom and pop. Although institutional investors, you guys, that's a problem. But I'm saying, where's the money at, right? We're at 3.4%. Prior to COVID, look at this. Prior to COVID, our savings rate was 8 to 9%. Prior to COVID, yeah, we had a lot of money saved. After COVID, where's the money at, you guys? Guys, where's the money on the sideline? Is that just a narrative? Is that just a narrative? I don't see the money on the sideline. You want to go to BlackRock? You want to go to Blackstone stock? You want to see how much money they lost? Didn't they just limit the withdrawals? Where's the money at, you guys? Just saying. All right, let's visualize median sales price. So you guys can see that the median sales price this year is orange, okay? The red line is 2022. So we're orange. You guys can see, even though all these people ran back into the market and demand rushed back in, and oh my gosh, you can see the median sales price is flat. All right. So it's completely flat. But again, you guys, we're almost coming to, the end of February. And at the end of February, this is going to be one of the ultimate tests for our current housing market. More than likely, this orange line is going to start going under the red line, which will indicate a national average of year-over-year price decline. So that's a really, really big deal, you guys. And again, in order for that not to happen, we will have to have more investor share this time and more fear of missing out. But yet interest rates are double and payments are much higher. I don't think so, guys. I think people are hurting. I know that people don't have money and they're drowning in debt. So what really makes y'all think, right? Or any of the haters, to the haters, what makes you guys think that we're going to have the same type of growth this year during quantitative tightening? I'm just saying, it's really weird. Let's move on to the next chart. So this is a good one, you guys. So mortgage payments, you guys are up 30% year over year. Okay. So what we're saying is the fear of missing out is going to be stronger in the face of 30% higher mortgage rates. And you guys, what do you think is going to happen if the median price does go up? If the median price does go up to 380, like it did back in June of 2022, do you know how much those mortgage payments can be? The mortgage payments are going to be astronomical. There's no way that people can afford to do this. But anyways, let me show you guys. So the start of 2022, we were under $1,700. Start of 2022, as you can see here, and it appears right here, I don't have the exact number, but under $1,700 for a mortgage payment. Fast forward to today, we're at $2,323. And again, you guys, yet the fear of missing out is going to be worse this year. More investors are going to buy shares in our housing market. Are you guys serious? Right? I mean, come on, to the haters, you guys serious right now? Who are you guys joking? I mean, y'all see this data? It's just so unaffordable. So unaffordable. Let's move on to the next chart. Now, here's one data set that I am watching, because these types of data sets, you guys, are going to tell us what effect the interest rates are having. Now, remember, since about November, interest rates have been going down. The thing is, guys, take a look at the listings that had price drops. So even though all of this demand has rushed back in the market, interest rates are so much lower. People forget short-term memory just how unaffordable things are until they start making offers and realize, oh, wait a minute, my mortgage payment's $1,000 more. Whoops, maybe I shouldn't buy right now. But look at this, guys. It's shooting up. We're at 5% of the listings right now that had price cuts just to sell their houses. You guys, that's more than double where we were at this time last year. So this is a great sign, guys, that this is still shooting up at 5%, which is over double where we're usually at. Let me show you another piece of data. So this is also a really good indicator, you guys. This is the amount of homes that sold above the final list price. And you guys can see that's actually trending downward. And that's what I was telling you guys I was hoping to see last week, is we want to see this trend start going down, because again, in order for people to sell their houses, they have to cut their prices and they have to now negotiate with buyers. And that's what we're seeing with this data. And the further down this goes, the better, because again, it represents only 20% of the homes sold above their final list price. So again, this time last year, double that. And again, also this time last year, we only had about 350,000 active listings. Okay. Right now we have almost double that as well. Here's the most beautiful thing of all, the biggest indicator, the thing that we want to see the most is inventory. Okay, with inventory, all good things happen. You guys can see it's skyrocketing up. Look at this. We now, you guys, have 4.4 months of supply available on the market as far as a national level. Once we hit 6 months on a national level, the entire national market, again, it's all hyperlocal, I get it, but the entire national market will be considered a buyer's market. You guys, this is great. Look at, we are shooting up. Look at this, just straight up. Look at that, 4.4 months. So despite the lower interest rates, despite all of the money on the sideline, despite all of the people flooding back into the market. And I'm not saying that. We hear that from all these critics. The inventory, months of supply, is shooting up. Interesting, wouldn't you say? So we'll keep watching this, guys. We want it to hit 6. You can see that's going straight up. We're now almost at pre-pandemic levels. This time in 2020, we were at about 4.5, 4.6. So you can see how close we really are. Being back at levels of inventory that is going to help us shift and reset the housing market. You guys can see that. Absolutely great stuff that we just reviewed, y'all. Now, what I'm going to do is I'm going to compare the peak of the housing market, which was June 2022, to what's going on right now. Now, the point of this segment of the video is to show you guys a few things. Number one, why price is more important than interest rate. Number two, how important it has been to wait. So I'm going to show you guys how much money you would have saved if you purchased right now versus if you purchased back in June. Now, the way I'm going to do this, I'm going to take the median sales price, not the loan amount, but the median sales price. I'm going to use that as the loan amount, and I'm going to find out what the interest rates were for that time. So I'm going to use the median sales amount for June and the median interest rate for June, and I'm going to compare that to the median sales price right now and the median interest rate right now, and we're going to see how much money we actually saved. Take a look. And guys, remember how I'm doing this? I'm just hitting mortgage calculator in Google. That's all I'm doing. I'm putting mortgage calculator in Google, and this is coming up. So first I want to show is where we're at right now. I already put this in here. So right now we're at $349,950 as far as median sales price. The interest rate average is 6.13, meaning that your payment right now would be $2,127 with roughly a loan amount with no down payment, obviously, right? Of a loan amount of $349. Okay, but let's see where we're at back in June. So remember back in June, we're actually at $391. All right, and the interest rates were lower, quite a bit lower at 5.78%. Okay, so that gives us a much higher payment of $2,089. And again, it has a lower interest rate. Okay, yet the payment is much lower on the other scenario. So what we do to figure out how much money we saved is we take the $2,289 and subtract where the payment would be today at $2,127, which means we would be saving roughly $162 a month if we waited to buy in June and we purchased right now. But let's see what our yearly savings is. So per year, we would save in just our mortgage, keep in mind, this is just our mortgage. I'm not even talking price yet. We would have saved $1,944 a year. That's a decent amount of money, but let's see what the 7-year savings would be, because a lot of people only live in their house for 7 years. Total savings, you guys, if you waited just your mortgage, $13,608. But remember, the median sales price is also lower. The median sales price is $41,050 lower. So you also save, we'll add that here, $41,050 for a total savings, you guys, a total 7-year savings of $54,650. That is an astonishing amount of money to save if you just waited. You didn't even have to do anything special. You just had to wait. Let me show you guys how to really work up a payment real quick, and we'll end the video. When I hit include taxes and insurance, then I can really play with this. I could put my down payment here. I can select my credit score, right? And the good thing is it changes all of this information right here. It'll calculate your private mortgage insurance. You guys can pull taxes off of Zillow or MLS. You can put your homeowner's insurance, and it will actually calculate your payment for you. So this is a really good trick and a really good tool if you guys want to use it, but always go to your loan officer to get exact numbers. So in conclusion, you guys, isn't it worth just waiting at this point? Isn't it worth that just to see what happens across the nation? I mean, at this point in the game, you guys, why wouldn't we just want to wait to see what happens next? Now, obviously, guys, if you've been listening to my channel, you know already that I'm trying to equip you guys to find a deal of a lifetime. And I'm also trying to warn you to be extremely cautious when purchasing a house. So if you're on the sidelines, don't just sit out of the market, right? prepare yourself, equip yourself, work on your credit, your income, your assets, become an expert in your local housing market. And above all, guys, have a positive mindset and love your life, love your family. Now, other than that, guys, I really appreciate you following along with me. I hope you guys got some new value, insights, and perspective. And if you're out there investing in real estate, you know I wish you luck and I hope you win.